So the other way, the other tactic that we are seeing people, I'm not seeing a lot of people, but I am seeing some people, and it has to be the right situation, is using a loan assumption. Now, what that is there are certain government backed loans that can be assumed. In other words, if James has a house with a government backed loan, I want to buy James's house, but I don't want to pay the current rates, and James has a lower rate on his mortgage. I can take over James's mortgage and start making the same payments that James was making. Now, the stars really have to align in order for this to work. You have to be flexible on time, both the seller and the buyer, because they do take a lot of time to go through the full assumption. You're not working with a traditional lender, a new loan at this point. You're working with the loan servicer of the existing mortgage. And so you have to have time and be patient with them to go through that process. There are companies that help guide you through that process, which I think is a good option, but they do usually charge about a percent, right? So if you're buying a house at 500,000 or a loan at 500,000 at least, they're going to charge you, 5 grand to help you get that loan. And so it is a little bit more expensive. And so time is a big thing for people. That's usually the piece that kills it. A lot of the times sellers, they need to sell quick and they can't, mess around for 30 to, or it'll be more than 30, but 60 to 90 days. Um, a lot of times they can't do that. And so they're not in a good situation for an assumption. And a lot of times buyers, they need to get something bought. They can't mess around for that period of time either. And so time is a big one. The other big one is cash.